Hello and welcome to a profitable 30 minutes on television. It's Capital Market on Channels Television. I'm Ini John Mekwa. Well, let's start with closing performance of market outside the shore, looking at overview of activities in different markets over the week. We begin with the United States, where Wall Street looked past disappointing results from major companies to wrap up its best month of the year. The Dow Jones Industrial Average was up 0.25%, S&P 500 added 0.19%, while the Nasdaq Composite rose 0.33% on Friday. All three closed at record highs, while the S&P 500 and Nasdaq clinched their best months since November last year. And then moving over to the European equities now, markets closed with mixed sentiments on Friday as traders digested a raft of U.S. and domestic corporate earnings. The UK's FTSE 100 index dropped by 0.16%. Germany's DAX was down 0.05%, but France CAC 40 index was up 0.38%. Meanwhile, shares in Asia Pacific also closed with mixed sentiments on Friday as investors monitored stocks of Apple suppliers following the tech giant's disappointing revenue. The Nikkei 225 was up 0.25%. Mainland Chinese stocks closed higher as the Shanghai Composite advanced 0.82%, while Hong Kong Hang Seng Index shed 0.8% as of its final hour of trading. Well, a little movement away from the equities now. Trading activities at the bond market was bullish this week as the bulls dominated most of the trading session. The trend was sustained at the close of trading on Friday with selling pressure across board. The overall average benchmark yield closed at 8.32% at the close of trading, indicating a 0.92% week-on-week rise. At the Treasury bills market, activities were mostly quiet, with a marginal fall in yields, while average benchmark yield rose 1.86%. Now, this comes as the DMO sold 235.05 billion naira worth of notes against 150.05 billion naira offered at its NTB auction this week. Meanwhile, yields on open market operation bills fell by 1.09%, while the yields on the central bank special bills was up 1.34%. Let's go to unlisted market now. Securities trading at the NSDC OTC Securities Exchange Index closed this week with 0.09% negative return on the share index on Friday. At the same time, the NSD's market capitalization closed lower at 617.04 billion naira as it fell by 55 million naira, and that was because of negative sentiment in prices. Total volume of securities traded during the week dropped 5.68%, 1.95 million units. However, the total value of securities traded during the week rose by 210.87% to 121.12 billion naira, while the number of deals carried out this week was higher by over 50%. Let's see the equities in Nigeria now. So investors have gained more than 144 billion naira this week. What a profitable week. And over 960 billion naira so far this month as the bull maintained its dominance at the NGX. The all-share index crossed the 42,000 level. We've been talking about this and expecting this for a while now. That was just a day ago. And total value of listed equities very much in the 21 trillion naira mark. Both key market indicators were up by 0.66% this week. In the sectoral performance, all 5 key counters of the listed equities closed in the green, particularly insurance, oil and gas, and the banking sectors as investors increase their interest for their key components. University Press led a pack of 46 gainers, up by 44.67%. GlaxoSmithKline is top on the list of 25 losers, while Eternal Oil, FBN Holdings, and Transcorp are top 3 most actively traded stocks for the week. Well, let's get a comment or two on that as we have our guest joining us here in the studio in Lagos, Joke Tolualoju, Portfolio Manager at Zcrest Capital. Hello, Joke.
Hi, good evening.
Good to have you on the show.
Thanks for having me.
So this week was a memorable one, I think, crossing the 42,000 mark. I know because I was on the stock market this week, so I've had to be counting down. Oh, we are 41, 41,800, 41,900, and then finally on Friday we crossed the 42 mark. This is a bullish run, a bullish sentiment in the market. How long do we expect this to stay on?
Well, so far this year, every time the market, we've just basically established 40,000 points as a very strong resistance. So every time the market has touched or tried to break 40,000, we just see it trickle back to its support of 30 to 39,000 points. But like you said, this bully rally was largely expected because so far, H2 2021, we're just expecting, in as much as we're struggling to find fundamental drivers that could drive a rally in the market. We're expecting rallies, if any, to be driven by specific events on counters like we've seen, particularly for the banking guys, largely FBN, First Bank Nigeria, and then its contagion effect on other tickers in that sector. We've also seen in the oil and gas surplus, and then also its contagion effect, and also earnings releases as people just try to take position ahead of dividend expectation or announcement. So for us, as much as it has broken this 40,000 strong support, we're seeing it's at 42,000. We're just thinking it just might, if this rally is sustained, it just might try to test another resistance of say 43 or 44,000. But speaking to whether or not the rally can be sustained, particularly, we do not think it would be sustained given a historical trend where it gets above 40,000 and then just trickles back to its regular support.
So you see a correction soon? Is that what you're saying?
Well, largely, according to historical trends, we should be expecting a correction. But in the event the market decides to surprise everyone, I would say that would just largely be driven by event-specific rallies. So say another surprising or unforecasted corporate news or corporate action, or another surprising figure or report from the macro side or from the fixed income side.
How much of this do you think is driven by the third quarter earnings? Because second quarter earnings did not seem to have a lot of impact on the markets. So how much of this do you think we can attribute to the third quarter earnings?
Well, for earnings releases, we'll typically find investors react to that news and then try to take positions in stocks or companies that have done well. But over time, we've seen that that rally is really not sustainable, can't be sustained in the long term. And particularly Q3, this is not even a quarter where companies declare or announce dividends and whatnot. You typically find that in, say Q1 or Q2 when they declare interim and final dividends, basically. So in addition to those specific events that would drive rally on counters, the earnings releases has also been a major factor that has contributed to that rally. But like I said, we really don't expect that portion of that component basically to be sustained over the near term.
So as the year comes to an end, you see, short-term investors coming in, trying to, make the most of it. And what impact do you see that having on the market?
Okay. It's largely just going to be business as usual, where we see rallies and then we find investors try to take advantage of that rally and then try to take positions. And we also see investors exit their positions from those companies, basically. So it's the investors exiting positions to take profits is not unusual. It's definitely in line with some regular trading activities. But in trying to say pinpoint when exactly they would want to take profits and all of that is rather subjective and dependent on each investor's decision to exit the market. So that, of course, is almost as clear as day that it would occur. But in terms of timing, that's what would slightly be difficult.
So how do you see the market ending the year? For me, next week we're starting a new month.
Yeah.
The last but 1 month of the year. So we're really close to the end of the year.
Yes. So for the end of the year, historically we've typically had a year-end rally, but it's definitely not like cast in stone. It's largely driven by events or driven by activities and whatnot. And then we're seeing that happen in the last quarter of the year, October to till now, so far. So for the year, on our own view, we still think this 42,000 that the market has reached is not, it's like basically untested or uncharted waters. And an expectation is for markets to align with historical trend of reverting back to a known support level.
Like going back to 39, 38.
Yeah, exactly.
That's heartbreaking.
I mean, but like I said, there are going to be undisclosed corporate announcements, new factors that would just further surprise us and then just take that rally up to 43 or 44,000 points. But it's just tough to say.
All right. Well, moving on now. Let's see some of the earnings that have been released so far. For instance, Dangote has released its third quarter unaudited earnings. Industrial giant and NGX most valuable company, Dangote, has released its third quarter result for the year, showing an outstanding performance. According to its latest financials, the company's revenue jumped by 34.2% to 1 trillion naira, up 761 of this year. At the same time, the industrial goods giant posted 49.1% growth in pre-tax profit, as after-tax profit climbed by 33.3%, net assets was up 1.6%, while its earnings per share soared by 32.5% against the previous quarter. And still in that sector, the industrial goods sector, we have Boa Cement also releasing its results for the third quarter, and it shows that it's the NGX, the company's net asset fell by 1.1% to 371.86 billion naira. However, its revenue jumped by 19.4% to 186.90 billion naira. At the same time, the industrial beverages pre-tax profit surged by 25.5% to 74.33 billion naira. After tax profits soared also 23.2% to 65.9 billion naira, while its earnings per share climbed 23.4%. So we see the industrial goods counter now. At least the investors do not have much to regret. At least they didn't have much to regret in the month of October.
Yeah. So far this year has actually been a better year for players in the industrial goods space compared to last year's performance, where we had all of that COVID restriction, closing of the borders, which was preventing exports to other countries, export segments and whatnot. But this year, so far, we've seen the border reopening basically just was a kickstart in that sector. And then we saw an influx of demand, and then players trying to ramp up production to basically meet or service that demand, yeah? And also this year, we also saw increase in price, which was largely driven by the need to cover for the increase in associated and production costs. And then that way they were able to both service demand and also cover or protect their margins, both gross operating margins and then bottom line. And I mean, so far, it has just really been great for the industrial guys.
Yeah, I just wanted to relate the realities of outside the market, you know, and what happens in the market. You know, okay. We hear, I mean, this year we talked a lot about the price of cement. You know, of course, we have the issues of import bill and foreign exchange, you know, and all that. How much of that affects what goes to the investors, the equities investors of these commodities?
Okay. I mean, at the end of the day, for equity investors, we're just super particular about corporate announcements, be it dividend, interim or final dividend, plans for the company to expand or extend its services capacities outside of Nigeria or Africa at large. Yeah. So for these companies to continue to deliver both top line and bottom line growth, they, of course, would have to make room for adjustments, basically, to accommodate rising costs. Like you said, the FX issue, liquidity issue, the USD, the Naira devaluation, basically, which was basically impacting the players on the production end, largely due to all of that associated in terms of gas, low poor fuel oil, which is just largely in production and all. So that price, I mean, if there had been no increase in price, it would have definitely reflected in their bottom line because they would have been able to adequately cover all of that cost. And then bottom line is largely important for investors in terms of dividend, like I said. So that would have impacted dividend announcements or expectations negatively. Yeah.
All right, Ajoke, we'll just take a break now. When we come back, we'll continue this conversation. Seeing more earnings that came out this past week, and of course, how it impacts the bottom line for investors, which is what you are really interested in. I know about that. Well, you're watching Capital Markets on Channels Television. We'll take a break and we'll be right back. You're still watching Capital Markets on Channels Television, and we're just doing a review of activities in the equities market in the past week, especially so much has come out of the corporate, the third quarter earnings of different companies. Well, moving over now to consumer goods, and then we have Guinness also released its results this year, and it showed a 58.10% increase in revenue, in contrast to 30.02 billion naira recorded in the second quarter of the year. Similarly, the breweries giant recorded nearly 2,000% surge in pre-tax profits, which stands at 5.9 billion naira. After-tax profit rose by more than 580% to 4 billion naira. Net assets was up 6.7%, while its earnings per share soared by more than 586% to close at 185 kobo. This is a lot of jump. You know, we have over 2,000% surge in pre-tax profit. Is this because we're coming out of the COVID, or is, you know, how do we explain this very high jump?
It's largely, I agree with you, largely because we're basically coming out of the coming out from COVID and all. For the breweries guys, the major business thrives on social events, having social events, gatherings and whatnot. And then with COVID, we saw all that restriction in terms of gatherings, activities, parties and whatnot. So that's significantly impacted in the ability to generate revenue as much as possible. But now that we have there's been an ease in that restriction and what we're seeing more people have social events and gatherings, and that is, of course, reflecting in the revenue so far this year.
So everything goes around and comes around. So while we're adopting virtual, it also affects, you know, another side of investors of the economy, and this is just one of it. You know, investors in Guinness are now smiling because economic activities are coming back. Well, why do you see them? I mean, this is the festive period. This is another social, and praying that we don't have another outbreak. You know, we see more restrictions being reintroduced in some countries outside Nigeria, Russia, China, and countries like, praying that we don't get there. Then the socials should be, you know, resuming more in this festive period.
Well, yes, I mean, like you said, barring any significant outbreak that would warrant you and necessitates us reverting back to all of that restriction, COVID restriction and whatnot, and people's willingness to go out more, have more social events or have more gatherings, I expect that to further impact or tell in their financial performance for the remaining quarter of the year.
All right, and then also the NGX. The NGX was listed, you know, after the demutualization, and then they were also listed on the premium board of the exchange, and well, it has released its third quarter for the year. According to its financial release, the NGX posted 15.9% growth in revenue, which currently stands at 4.38 billion naira. At the same time, its pre-tax profit climbed 26.5%. After tax was up 10.5%. Net assets rose by 4.8% to 32.78 billion naira, while its earnings share stands at 75 kobo. So tell me, what do you measure this against? Because I mean, they just got listed. Yeah, exactly. So where do we measure this against to have this result?
Largely, I mean, they just got listed. So for them, they would be required to make financial information available. And like we already saw, they did that comparison against 2020 figures, which was just recently released. But largely, in terms of valuing or trying to see, it's like valuing the NGX basically. We'll just, for now, I mean, till we have better light, or till we have there is like more room for us to evaluate performance in terms of financial strength, capacity, growth, and whatnot. We'll like to just be using relative multiples. So trying to see what's its pairs, not necessarily in Nigeria, because I mean Nigeria not just one NGX, but its pairs across continental markets, basically.
So what's the perception of investors, you know, on NGX since they got listed?
It's been quite. I mean, I would just. It's been quite like undulating. So we get a bit of trading activities, both buy and sell. Like say, investors are super cautious about venturing into or committing funds basically into the NGX. To just like to have a better time span to just assess them on a financial stance, and also on a qualitative stance, and see just how to go about it.
Okay, so investors still want to wait and see, and they want other people to take the risk first, you know, and see how it goes. All right, well, thank you so much, Ajoke Toluwaloju, Portfolio Manager at Z-Crest Capital, for sharing your thoughts with us in Capital Market today.
Yes,
appreciate your time.
Me. Thank you.
And just before we go, we'll bring you some forecast of what to expect from the capital market in the coming week. Analysts expect positive reaction to the flurry of earnings released this week as investors rotate their portfolio towards dividend-paying stocks ahead of 2021 full-year dividend declarations. We also expect profit-taking activities later in the week as the bears are likely to cash out on the gains across counters. That's what Ajoke was saying earlier when she said that perhaps we might be going back to our 38, 39 level. Well, I hope not. And then going to the Treasury bills market now, traders expect yields to trend lower in the coming week as investors react to the recent moderation in the stop rate at the NTB primary market. A total of 103.80 billion naira inflow is also expected from the UMA maturities next week. Now, moving over to the bonds market, traders maintain expectations of lower average yields in the short term in the face of reduced supply of instruments in the fourth quarter and deliberate efforts by the DMO to reduce government's domestic borrowings. That's what we expect next week. We'll see how far it comes true. That's it on the program. Thank you so much for being a part of it. Have a great weekend. I'm Ini John Mekwa.